46 what? Or 4?
$4.6.
$1.06.
Yes. $4.06 per pip. Yes. So if now what's going to happen here is for 20 pips, if this is the lot size you use, right? If the market goes against you 20 pips, it means that you are going to lose $4 in 20 places. Is it not? If it goes in your favor 70 or 50 pips, you are going to make $4.6, is it not, in 70 places. This is clear, Abi. Don't worry, you get it more as we continue. That's why I don't take time on to trade. Okay? So it's still important that we talk about them. Alright, so every other thing here is just basic. Okay, so your equity. What's the difference between your equity and your down? And there are some pullbacks that are very deep. They go deep and some of them will even turn to reversals. So you got to learn. I will teach you the act of profit taking. Part of this thing.
Are you saying the process where it goes up, you can stop?
Of course.
Oh, okay.
You can set it.
Okay, you can set
Imagine that we actually did this trade. We entered somewhere around here. Here to here is, this is entry, this is stop loss. Abi?
Yeah.
This is entry. This is stop loss. Right? Stop loss. Then we know that this market moves around 50 or 70 pips, is it not? Then we now go to maybe somewhere around 40 or 45 pips. Right? And then we put our target. So, when the market starts to go up, if it gets to 45 pips, the broker will close the order and give us that profit. So, when it's still running, it will be the equity. So, once it gets to this 45 and it's closed, that equity will be translated to our balance. If, as this market is moving now, if it gets to the if it gets to this 45 pip and you did not set the target, that profit you made here, if the market reverses, you will lose it. Is it not? You will lose it.
So you're saying even though if it gets opposites,
that one, you're already out of the trade already. Whether it goes above, that's why trading is difficult, because some people are worried about, they are part of the trading errors, right? Some people are worried about leaving money on the table. You can set your own target at 45 pips, and then this news comes and runs 240. You'll be blaming yourself. I would have not put and then the day you will not put target, you start wishing. Yeah, the day you don't put target, what you just see is 1 week like this. Just
goes up and come down.
I'm telling you.
So what happened when you press it?
So it's safe to put the target.
And 2 enter. 1 is still running like so many days again, and it's still what is the cost? Meanwhile, you use the same time frame for 3 of them. So
yes. Yes.
It's running for days now. It has not still closed.
Well, the thing is, for trades like, see, let me tell you, there's something you have to understand. Some brokers will not charge you a commission for holding a trade overnight, but some will charge you. If a trade is dull, it means that it's in a trading range, is it not? It's not, the volatility is not strong enough for you to either go to your target or to your stop. It's flat. You know, it's just going up and down without actually giving you a trend. So if your trade is like this, if this trade is lasting for too long, you are suffering commissions here. Because every night they will charge you a certain amount of dollar on those trades. Yes, for holding it. Because when the broker is closing for that day, bank has closed, he will close it, the next day he will open it again. So that 1 hour between 10 o'clock and 11, you will see that some money, if you have only that one trade, and that trade is showing you minus or red $10. If you look at the difference between your account balance and your equity, you might be seeing minus $12. Meaning there's an additional loss of $2. And that's coming from the swap.
So when you experience such, what do you
We're going to get to the point where we treat the case scenarios. There are 5 case scenarios. There are trades that will take off and go to your target immediately. There are trades that will take off and stall. There are trades that will just nosedive, go straight to your stop loss. And if you're not careful, you'll be dragging the stop loss down and down and down. Right? And
maybe that is what is eating my money.
what is eating your money? Your target is somewhere up here. The market starts to go and it's trending. It does as if it's going up and it's trending. It does as if it's going up and it's trending. This is very dangerous because when it comes here, you will move this stop down. Abi? You will take it down when it starts to resume. Abi? Then when it's coming again, you push it down, believing it will turn. Yes, until it finally falls. And before you know it, you have lost about 10% of your account size if you're not careful.
So what do we do in situations?
It's a case scenario. We'll talk about it when we get there so that we can finish what we have. Because if you are right, you make a lot of money. Is it not? Yes, you make a lot of money. So, but do you know that there is a lot size that you can't take because it will exceed your margin? Do you understand? If he has taken the $40 on this trade, you now open another one, he takes again $40. How much do you have left? 20, Abi? Now that remaining 20, if you try to take another trade, you will just hear that you can't take it anymore. Yes, I understand you.
What we are saying.
Yes.
Okay.
So when your margin has been exceeded. Yes. That's what it is. And uses up the margin, the free margin, the broker starts to close the trade automatically. So you see the trade that is running in loss will start closing out. Some of them will close it out by reducing the lot size. So if you are having a lot size of 0.4 before, he can reduce it to 0.2. So the trade is running, but he has taken out $40 from your account so that the lot size will not be too heavy for the trade to keep running. Is it that he does that or he will shut down the highest losing trade? All right. So you have the lesser losing trades running and then you have margin. So when you don't have anything again, that's when we call it margin call. So you get a margin call from the broker that you have exceeded all your collateral. Go and put more. Yes, let the leverage be there. Except you have a lot of money. Remember that to buy that crude oil, you need a lot of money. Right? So you need the leverage so that you can afford to buy it. But we are not saying that you should expose too many collateral at the same time. That's the message. So the leverage can sit there, but don't just be using it because you have the leverage. You just start using, firing any trade that comes. Yeah. So every other thing is just basic. My person uses a lot size of 0.1. Okay, I said for a lot size of 0.1. What will be your profit if you bought Euro USD and the market moves from this to that? So you calculate it. What is going to be your profit in dollar? What is going to be your profit? First person to give me answer gets a lunch. I have websites that will give you a list of all the PIP value. But that will be important for someone who is going to do the calculation manually. Alright? Because the PIP value is important for you to generate the lot size you want to use to trade. But your calculator can generate this thing for you. So there's no point using knowing what the PIP value is or trying to do the mathematics. Is that okay? So if you're taking 20 pips, stop loss, and then you want to get your lot size, you can factor in the stop loss in pips and then multiply it by the pip value of that currency. Is that okay? So that is going to give you this 0.46 that we have here. So, but that's a long way of calculating this. There's a formula around it. But we're not going to do it because the calculator is going to do it for us. Alright? So it's not actually relevant. There's no point wasting time for things that are not required for successful trading. Right? Very important. You need capital. Alright, in the small message I wrote at the beginning of the entire presentation, I emphasized it that you need capital. Can't make money without capital. So a lot of people look for the first two and they don't even have the third, which is the capital. So you need capital, really. Alright? And then you need a strategy. You need an edge. Your stops, your money management rules, everything is in your strategy and edge, right? So you need to establish an edge. You need, as a matter of fact, if you have these three things, you are going to be a successful trader. There's no two ways about it. If you have capital and you are a disciplined person, the discipline we are talking about is not one big thing. The discipline is simply execute your trading rules correctly. That's what we are saying. Don't interfere with it. Execute it the way you design the system to work. That's what we're saying. If your rule says use this percent, is your discipline that will now make you to actually use it. Okay? So these are very important. And then you can see the biggest is calculating what the volume is, right? Without first calculating what volume to use, you got to calculate your volume. You can't take a trade without first knowing this thing. If you do it, you are using God's feeling. That means you are no longer doing technical analysis. So TA says calculate. Calculate because you cannot just... you have to accept uncertainty. The uncertainty of the market. And I'll tell you why it's difficult to accept. If you allow you to be uncertain, you don't get paid if you are uncertain. If you're a medical person, you have to know it and you have to be right. And that's the way we have learned to operate. Even a student, if you are wrong about an exam, you will fail. There's no it's okay to be wrong. The society doesn't allow it. So this is a different world. If you come here, you got to know that it is okay to be wrong. That's a difficult concept to accept. That you can do your analysis, place a trade, and accept that it's possible for it to be wrong. It's difficult to accept. But that's where this thing begins. Once you start to accept the uncertainty of the outcome of this trade. I've told you that at the level of one trade, we do not know the outcome. But if it gets to 20, 25, we should start to see some profit. So, but at the level of one trade, we don't care. That's what we're doing here. All right? You have to plan. Ensure that you have self-awareness before making trades. Much with discipline. Because already you have reviewed your trading plan before you start to trade. And then you know that, okay, this is the rule. These are the rules to trade. In your head, you are waiting for levels. You know, okay, this is wrong. This is right. This is the rule. All right? So that's very important. And she fingers when we're in front of the screen.
True.
Every signal looks buyable and sellable. Everything that is happening. So you have to be... Sometimes it's better to... Because you can sit with the screen and interfere with it. So if you're not able to control that, one very good, shortcut is to just place your trades and just close the chart. Allow it. That's what I do. That's what I do. As long as I've done my analysis and I see that the setup is sitting the way I want it to sit, I will just open the order and leave. So at the end of the day, when I come back to the computer, what I find out is if I had successful trades or losing trades. That's all. The next day I continue again. So that's the right thing to do. Then you are not counting each trade. You are counting 30 trades, 40 trades. That's what you are counting. Okay, so discipline yourself and develop a trading plan which should not be broken. Right? This is, of course, stating the obvious. So you have to develop your trading plan and you must never break it. And then remember that the forex market is neutral. You can be losing money on this trade and I am making money on that trade. Nobody is against you. Nobody is chasing you.
Even the broker.
Nobody. For real. The thing is that it's almost like retail traders are operating with the same mindset. And that's what we're trying to take you out of. Retail traders are all chasing the market. They are all entering, they trade what they call monkey see, monkey do. Right? When the market makers drive the market to a certain level, they chase it and then they get trapped. So that is why a lot of them lose money. But they're not chasing you. Nobody's chasing you. The market doesn't know whether you're making money or losing money on that trade. Right? Forex doesn't know. The chart continues to move. Anytime you open the chart, it continues to move. It has no idea whether trader A is in profit and trader B is in loss. Is it not? It doesn't know. You can be buying Euro USD and I'm selling it. Your analysis led you to take the decision to buy. And mine made me to sell. So the market does not know who is buying and who is selling. So it's not against you. It's not against anybody. So it's a neutral market. The best way to clear your mind and avoid that chaos is to follow a plan. You cannot outsmart the market, no matter how intelligent you are. Can't outsmart the market. The only thing you do is give out a little of your account balance every time and follow your trading plan all the time. That's all. If you try to say I'm reading the market, some people claim that they are experts in technical analysis. They don't make money. I respect someone who is more disciplined in following a trading plan than someone who is an expert, worldwide, world-recognized expert in TA. We only use them because they will help us to increase our win rates. Is it not? Yes. They will help us to take better trades. But ultimately, if they are not disciplined, I've seen people that will give you signal and they will lose on that trade. It's possible. So we have to really be. Does he give signal and lose on it? Now there are some things you still have to deal with, right? Okay, so this slide I like to share it. I say every trader have they have his or they have their own demon to exercise, right? In this journey to becoming a successful trader. All right, so these are some of the things you are looking to do, right? You're looking to, you decide to be a trader even many years from now, right? That's the mindset. So you're looking to say, okay, this is the financial market. Of course, if you want to make money, I don't think there's a better place to be than the financial market. This is the height of it. Okay? If you learn this thing well and you can do it properly, you have capital. This is the height. Easy money. Right? So decide that you want to be a trader 20 years from now, 10 years from now, 30 years. Actually, you see yourself trading like a pro. Learn as much as you can. Do not rush to trade. Don't get greedy and rush to trade. Okay? Don't just say, oh, because I've learned rudiments of technical analysis, let me start making money now. No, just 2 months is not too much. Okay? It's not too much. Develop a method for analyzing the market, which is what we're going to do. Develop a money management plan. Very important. Be aware that a trader is the number one destruction of a brilliant trading system. Your trading system might be very good, but you are not executing it correctly. I've given a trading system to 2 people, the same trading system, clearly written, and then one person is making profit consistently and the other person is not. It's not a joke. It's real. If we get to the point where I start to give you trading systems, right? Everybody will not have the same account balance. Because trader A, apart from, there are some errors that are natural. I hope you know. There are some errors that are natural error. You want to take 0.1, you mistakenly take 1.0. Have you seen that kind of error? I made a lot of money on that kind of error. I was lucky. See, it happened many years ago. So I was just starting out on that account, and for whatever reason, I did the analysis and placed my order, not knowing that it is the lot size of the previous trade that is still there. I didn't update it. So I placed, it was a pending order, because if it was a market order, I would have seen it immediately. So it was a pending order, meaning if the market gets to that price, let it trigger or let it buy. So my usual self, I will do that and go away. So I put it and then I came back. I had, how do I relate? Imagine you have an account that has $100 and you come back and you see $600 in that account. That's what happened. So now I didn't know what to do, whether to cut it or to leave it, but the money was looking good.
Okay, and the trade was still on.
Yes, the trade was still on. So I opened the account and then I saw it and I said, Jesus, right? Jesus, how come? So I looked at it. One of the trades had additional zeros. When the difference between all these things are very little, 0.1, 0. But it had additional zeros. How he went there, I don't know. Do you know that I felt like not trading that month again. But immediately I just closed it because it's an error. Whether it's on the good side or on the bad side, you got to close it. That's the right thing to do. So I was looking at it. If it goes up, it will come down. If it goes up, it will come down. And it was going up big. When pip movement is high, when one pip is worth like $1,000, if the market goes in your favor, you are seeing $5 because pip moves very fast. I don't know if you have seen that thing move. Market can move 5 pips. So GBP pairs is like temple run. Grrr, that's how it moves all day. Up, down, up, down, up, down, up, down, up, down. That's how it moves. So as it's going up, down, up, down, up, like it can go 5 pips in 1 minute, or 10 pips in 1 minute, and go 20 pips in next 10 minutes. So that's how your money will be rising and reducing. You see, so I came back to that account and I closed it. So that's human error, right? It's part of the trading thing. I was lucky. If I wasn't, you'll be wiped out. You just come back and see that you're wiped out. Yes, it's human error. It's part of it. And it happens every once in a while.
How do you
Okay?
close the trade?
How you close? That's why there's something called margin percentage. You see your percentage, how much margin you have used. They take your equity by your margin times 100. So you now see that, you still have maybe, you are using a margin of 400%. Some traders advise that you should not exceed 500% for any reason whatsoever. But I don't even come close to 500, right?
What I see here is modify order, delete order, then chart.
And modify order or delete order. Modify order is a new feature now. So if the trade is already on, modify order can lead you to stop, that's close, or adjust your lot size, right? So if you look at the base, you see close with so profit or so loss.
But sometimes that adjustment of lot size doesn't.
See, does not exist in the market. As a rule of thumb, if you are very sure about, if you are very, very, very sure about a trade, don't take that trade because it's going to be a loser. Yes, because there's no certainty. If you are sure that the market is going to buy, nobody will take the opposite side of that trade. Is it not? So there's no certainty. The win rate can only, in fact, the market is a place of confusion. It's chaotic. All right? So, of course, TA has helped us to say, oh, there's a trend or there's this. But if you didn't know TA and you look at the market, you'll be confused. You don't know what to do. Okay, so we're taking our pattern in that chaos. Now, this is very important. And then, sadly enough, those that were not around yesterday, they might not understand, what I mean by win rate and all of these things. But they are very easy. Yesterday, we saw that if you have a 50-50 system, you can still make money. Is it not?
Yes.
Yes. Yes. You have a 50-50 system and you have a risk to reward that is even 1 point.
No 1 is to 1.
Yes. 1 is to 1.1. Right? You can still make money. Let me tell you, any trade that you are taking, if you take a trade where the trend has not yet emanated, the trend has not appeared yet, and you place a trade, it is less than 60%. It is either 50 or 40%. I don't know if it makes sense to you. It's a 50-50 system. If there's a trend, you can see that there's a trend now, uptrend. There's a higher chance of getting that thing right. It's a 60% system. Or it's a 60% trade. But if, let's say the market is going up and you're trying to trade the reversal, you're trying to trade the reversal on an uptrend, the downtrend has not started, has not formed. That is a 40% system. The chance of it happening is lesser. Okay, so now when you have this type of trades, in the trader's equation, we say that the probability of success times your reward must be greater than the probability of failure forward. And this thing should lead you to taking positive trades and make you shy away or stop taking bad trades. I don't know if that thing makes sense, what I just said. See, multiply by your risk. It has to be greater than this. Now look at it. If you see a setup and the setup is maybe a pullback in a trend and there's a breakout, a simple strategy, trend following strategy, there's a trend already, you are going, the probability, the likelihood of it happening is high. So we say that is a 60% system. Is it not? That's a 60%. Now for a 60% system, the probability of your success is 60%. Now you are risking your reward. Okay, let's wait with this. Now let's go to the probability of your failure. It's 40%, is it not? Now, your risk to reward, we are now saying, what can you accept? If the chance of this thing happening is high, because I want to assure you that you cannot know what the probability is on a trade by trade basis, right? You can only look at a trade and say, I feel it will work. This one now is feeling, pure feeling. But then there is a way to even know if there's a trend. If there's a trend, the success will be higher. Because we are saying market has inertia. We established market has inertia. If market is in a trading range, it likes to stay there for some time. If it's in a trend, it likes to continue for some time. So that means that there is a likelihood of this thing happening. We're not saying it's 100%. We just say it's 60%. Right? So now, this is the win rate. And this is the probability of losing. If my reward and my risk is 1:1, do you know that I'll still make money?
Yeah.
In the long term?
Yeah.
In the long run, I'll still make money here. If my risk is 1 and my reward is 0.7, do you know that I'll lose money? Let's say you risk $10 and you took out $7. You exposed $10. It's a trend following system. You feel it will work. but you risk $10 or let's say $100, and then when the market started going in your favor, got to $70, you now stopped it. Right? You took a reward of 70, but you actually exposed 100. In the long run, you are going to lose money. Are you aware?
That's 40.
Yeah,
That's
one,
42. That's 40.
Yeah.
You will lose money in the long run. In the long run. For this particular case, you might make money, but in the long run, we established yesterday, I gave you some of those charts, with 60% system, the least, as a rule of thumb, don't take anything less than 1:1.
Can't we make it vice versa? 0 to 1, 1 to like 60%?
Well, we are establishing that risk is 1 by default, because you are now saying 1 is to whatever you are taking on your reward. Yes. So if you want to do that kind of change now, you just say 1 is to something bigger on the upside. Right? So what I'm trying to say is, if there's a trend, higher chance of success, right? The trend is there. We're not doing something that has not yet happened. We now say, okay, 60% chance. But even in a trend, you shouldn't accept anything less than. If you're not comfortable with this, I'll show you that slide one more time. There's a slide where we saw your win rate and whether you are going to be green or red. Abi? Yes. See now, if you have a win rate of 60%, right? You can see 60 here. And you accept 0.5. You see that you are red. Is that okay? This 60%, 0.5, let's say, so that you can understand this now. You took profit at $50. You stop the trade at $50. It's a 60% chance your account balance will be remaining $10. Because the 40% times when you will lose this $100 will eventually kill the times when you were accepting a loss of $50 on this trade. It's clearer now, right? Yes. It's clearer. So, it can only exist between 60 and 40. The least you should do is 1:1. And don't try 1:1 if it's a reversal trade. If you try 1:1 on a reversal trade, you know what is happening, Abi? Well, let me show you. See what's happening. If you try 1:1 on a reversal, if it's a reversal trade, there's no trend. You are saying that the market will turn. Is it not? You are saying the market will go the opposite way. The chance of that thing happening is how many percent? 40. If you are not sure whether it will work or it will not work, right? You are not sure, it's 50%. But if there is no trend and you feel that it's not going to work, it's 40%. Not. Now, if you accept a risk of 1:1, of course, this is very obvious. You end up not making money in the long run. I'm not saying you did not win in this trade, though. You understand what I'm saying now? I am not saying that you didn't win in this trade. What I'm saying is that your trader's equation is wrong.
It's not in your favor.
Yes, it's not in your favor. Your trader's equation is not in your favor here. If you are taking a 40% system, look at what the 40% say. 40% say 40 for 40, you have minus 20%. If you are accepting this type of trade, you take a reversal trade. If you take a reversal trade, you are telling the market that do something that you are not doing right now. So the market is supposed to pay you more money. Yes. For you to make money in this type of system, you shouldn't accept anything less than 1:2. From 1:2, look at 40 now starts to make money. Is it not? 40 starts to make money. Myself is the worst thing that can happen, right? The worst thing that can happen is 40%. if I want to eventually make money at the end of the day, if I use 1:2, my trader's equation is in my favor. Of course, it's obvious. Trader's equation will be in your favor. If I change this into 2, what do I have here? 80. What do I have here? 60. Is it not? Trader's equation is now in my favor. This is greater than this. Make sense? Right? So, what we are saying here is, why I took my time to explain this is, when we start, I'm going to emphasize 1:2. So that you can understand that if you are taking, we are assuming, we know that our system is good. But there will be more blessing if, even though we are using a 60% system, we are still taking 1:2. There's nobody that said that you can't make 1:2 on a 60% system, Abi. You can. You can make 1:2 on a 60% system. Okay? So, very, very important. Very, very, very important. All right, so I think that's the end of the class for today. So if you have questions, let me hear.